You ready to buy a home? Whether it's your first home or next home, it's an important investment for your future. It's essential you are in the financial position when looking for your new home. If you're ready to go, excellent. If you're not quite sure, no worries. I'm going to give you a blueprint so you know exactly what you need to begin. Let's get started. Hello, my name is Herbert McGurk, a real estate agent for Social Impact in Beverly Hills, California. Thank you for tuning into my real estate channel. Please subscribe, comment, or like this video. If you're going to purchase a home, good for you. What are some of the preparations you will need? Let's take a look. Here are a few things you need to consider preparing yourself for purchasing a home. Income. Have a steady income is primary when purchasing a home. Whether you're buying with a loan or all cash, it's important that you have a wherewithal to qualify for a loan and have a reserve. Your credit. It's important you know your credit rating and keeping it up as high as possible. Sometimes you can take care of any blemishes by looking at the credit report. When you have a better credit report, you will get a better interest rates, something to consider. Ratios. What is the income to expense ratio? You might want to consider what is affordable monthly for your mortgage and expenses for your home. You don't want to overextend yourself or create too much hardship. What are some of the expenses of owning a home with a loan? Principal. This is the amount you pay and will have to pay back, your interest. This is what the bank charges you for borrowing the money. Taxes. In California, you will pay taxes, which is calculated by the percentage of the purchase price of your home. Insurance. This is based upon the value to replace your home. It's essential if anything should happen to your home. HOA. This is a monthly or annual expense that you pay for common spaces if you have a condominium or an HOA community. Utilities. Something that varies the amount of energy you use. Now, your down payment and closing cost. The down payment, this can be anywhere between 3 and 20% or 100% if you don't want to have a loan. PMI, if you want to avoid paying private mortgage insurance, you might consider putting 20% down or more. Your PMI is the monthly fee added to your mortgage, which doesn't reduce your principal and interest payments, but rather this is insurance charged by the mortgage company. Closing costs. Closing costs, which is usually anywhere between 1 to 6% of the value of your home. This will depend on the mortgage company, escrow fees, and any points you may want to pay to reduce your interest rate. Additional fees would be for an appraisal, title, and bank fees. After reviewing your financial portfolio, you will need to contact a lender if you're going to have a loan and get a pre-approval letter from your lender. The pre-approval letter, your lender will provide you with a pre-approval letter after they have received all the income and expense paperwork that they require. By having a pre-approval letter, you will be in the position to secure an offer and go under contract. Your budget. You now have an idea of what you can afford and the price range. Make sure you keep your reserve, and you probably don't want to purchase any large items until you have bought your home. Agent. If you haven't already hired an agent, this would be a good time to bring them aboard. This can be a member of your family, a friend, or someone you trust. A trusted advisor as your real estate agent will be representing you in the purchase of the home. It's important you know, like, and trust them. No agent? Well, it's possible that you can use no agent when you're up against a seller and their agent, but it's best you have representation looking after your interests. If you're buying a home by a for sale by owner, then you should still have someone representing you. The seller pays all commissions and compensations to the agents. Therefore, this is no additional cost to you. Now you can start looking for a home. The criteria. What type of home are you looking for? What's important to you? Number of beds, baths, size of the kitchen, backyard, location, schools. What do you want most? Your priorities. What is the most important things you want? What are the must-haves and what I'd like to have. Make a list. Price. Know how much you can afford. Sometimes we might find a house that costs more than anticipated. Always check with your lender. Once you find the house you want, it's time to make an offer. This is the moment you have been waiting for. The offer. When you submit an offer, it must be in writing using a contract from your local state real estate department or organization. Stated in the offer are the price, terms and conditions, and financing, if any. Your story. I strongly suggest you write a personal story why you want this house. Your cover letter with your offer carries a lot of weight with the seller considering someone purchasing their home. Earnest money. Your earnest money is also called your good faith deposit. You can put 3% purchase price of the home and show the seller that you are serious about purchasing the home. Your good faith deposit will be returned to you if don't remove all your contingencies when purchasing the home. Once you've submitted your offer, it's either accepted, countered, or rejected. If your offer is accepted, then the purchase process begins. Most of the burden is on you to satisfy the purchase contingencies. The clock is now ticking and time is of the essence. Your inspection. Your first contingency is your inspection contingency. You usually take up 7 to 14 days for inspections, on some of which will cover the essential workings of the home, the roof, the electrical, plumbing, interior, exterior conditions of the home. Depending on the condition of the house or discoveries by the inspector, this will be a pivotal moment in the purchase. And if everything checks out, great, you can move on. If not, then you will need to take into consideration the breadth of work the house may need. Here are some options depending on what is needed to have the house in good condition. Your discount. You can ask for a discount on the property based upon the amount of work needed, or you can get a credit and request the credit to be made for repairs that you will do after the purchase of the home. Fix it. You can request that the seller repair the problems before you remove your inspection contingency. Now this is either accepted, so if you get accepted all the conditions of the property as they are, then the choice is up to you. If the seller does not accept your requests, then you can cancel escrow and receive your good faith deposit back minus any escrow fees. The appraisal. Your second contingency is the appraisal contingency. Whether you're going to get a loan or not, it's always best to have an appraisal on the property to see that it compares to the rest of the homes that have been recently sold in the area. Loan. Your last contingency is your loan contingency. Of course, if you can skip this process if you're paying all cash. Once the lender has given you your conditional approval, you are able to satisfy all conditions. You can remove your loan contingency. You are now on your way of closing escrow on your home. You're ready for your final walkthrough. This allows the inspection of the home and to see if anything is needed that was fixed or not fixed, and the condition of the home is the way you remember it. Also, make sure they show you everything you will need about the house: the alarm system, lighting system, sprinkler systems, garage door openers, or anything that you will need to know about the house. It's time to get all your documents and review the numbers. Closing document. These are closing documents which show the proof of the home insurance deed of trust, initial escrow statement, and review these numbers. When you review your documents, make sure everything adds up, such as your loan amount, interest rates, escrow, and title fees. Your settlement statement. This will be your loan statement, mortgage note, and all the fees associated with closing. Owning a home is an amazing experience and a great source of pride. Please feel free to contact me with any questions. I hope you enjoyed this video, which has been informative, and if you have any questions or comments, please feel free to contact me. Please subscribe, comment, or like, and I'll see you on my next video.